Good morning, everyone, and welcome to our Friday market update. Now, guys, on this session, I'm going to be updating you on the pairs that we've been looking at throughout this week. So, without wasting time, let us look at our first pair, which is what the euro over the Australian dollar. So, this one on the higher time frame, we do have what price giving us this continuation structure that's from the breakout. So, this is having what the higher probability of impulsing all the way to the downside. And as we're moving into our mid time frame, so previously, we do see price giving us what this first confirmation by breaking out and then impulsing to the downside. That is when we would have been taking advantage of this impulsive run by looking for our entries. But price again has given us what this is our second confirmation to confirm that this is having what the higher probability of impulsing all the way to the downside. So this is how we are looking to take advantage of that impulsive leg. So price over here, all that we are looking for is just a simple continuation structure. So price is in the process of forming it. All we need now is just one swing high, and then we'd be more than happy to execute this because this would have been not a valid continuation structure. We do have our impulsive movement. We do have our two swing lows. All that we're looking for is just one swing high. Then we can be able to place out our sell stop on the breakout, stop loss above the structure, and our take profit all the way to the downside. So this is how we are looking at what at executing what the euro over the Australian dollar. So this is what my favorite pair of the day. So as you can see over here, just like on that impulsive leak, this is how we're able to capitalize on what using our small entries on the all the way to the downside. So this is what a similar type of movement that we are looking for. So now for our next pair, which is what the euro over the Canadian dollar. So coming on to the daily time frame, we do have this is an impulsive move. This is our corrective structure price forming a breakout. So this is having a high probability of impulsing all the way to the upside. Now all that we're waiting for over here on our mid time frame is just that first confirmation. Something similar to this, and then on the lower time frame, that is when we can wait for price to give us what those small continuation runs that will be looking for in order for us to be able to execute our entries. But we have to wait for what confirmation on the mid time frame first before we can drop onto the lower time frame. And just like for our next pair, which is what the Australian dollar over the Swiss franc. So on the daily time frame, I do have what this corrective structure over here. That's from the breakout. So this is having a higher probability of impulsing up. But on the mid time frame, we are still waiting for price to give us what. So price has in fact given us a continuation structure. So yeah, we can use this as what is our continuation structure. Why? Because we do have what two swing highs. As you can see, two swing highs and then two swing lows. So on the lower time frame, let us drop there and see what we are looking for. So just to make our charts neat, I'll just remove this and I'll align this properly. Okay, perfect. That's it. So now all that we're looking for over here is just a simple correction because price has already given us a clear impulsive movement. So all that we are searching for is just a simple small corrective structure that we can use to execute what our entry all the way to the upside. So this is what I'm looking for on what AUD CHF. So our first target is going to be around there. So we'll see how price reacts when it gets around there, whether it forms a continuation for more buys or a reversal. But this is how I am looking at the Australian dollar over the Swiss franc. And then so I'll just move this a bit further up. So now for our final pair, which is what the New Zealand dollar over the Swiss franc. Let us jump onto the daily. So on the daily time frame, we do see price coming from this impulsive move, giving us what this corrective structure. So overall, this is having a higher probability of impulsing all the way to the upside. And now coming into our mid time frame. So also over here on the mid time frame, if I can bring this trend line back a bit like so, we do see that you also having what our mid time frame confirmation. Why? This is our impulsive move, and this is acting as what is our corrective structure. As you can see, we do have our two swing lows. and our two swing highs. So overall, this is having what a higher probability of impulsing all the way to the upside. So on the lower time frame, what are we looking for in order for us to execute our entry? So I'll just align this proper. You can see it like that. So this would have been our first entry. Why? Because price gave us a continuation pattern near the breakout, as you can see. So this would have been our first entry, but this structure was not that clear on the higher time frame. So that's why we are not able to use this one as our entry. But overall, all that we're waiting for, price is giving us a clear impulsive move up. So we're waiting for price to give us a small continuation that we can use to execute our buy. So as soon as we have a small corrective structure, this is how we'll take advantage. Enter on the breakout and our stop loss below the structure, take profit all the way to the upside. As you can see, so this is how I am looking at what the New Zealand dollar over the Swiss franc. So we're looking to ride that mid-time frame impulsive leg on the lower time frame using what those small corrective structures as our entry points. So this is how I'm looking at what the New Zealand dollar over the Swiss franc. So my top pairs for the day mainly focused on the New Zealand dollar over the Swiss franc, the Australian dollar over the Swiss franc, and then finally the euro over the Australian dollar. So we might be getting an entry on the euro over the Australian dollar not so long ago. So what I'm going to do, I'll just send out an alert on this one so we can be notified as soon as price reaches that area so we can be able to execute our entry. So guys, I don't personally trade the fundamental news, guys. I don't really trade fundamentals. I'm more of a technical trader. I'm mainly focused on my technicals. So I'm not really focused. So I know today it's a big day, it's NFP. So I'm not really focused on NFP, guys. So, but sometimes what my technicals do is that most of the time they do align with the news. Let us say NFP mainly affects what USD related, but let us say if this pair Euro AUD was USD JPY. So most of the times, if NFP was happening right about now, so it was most likely to respect the technicals and go in my overall direction. But for me personally, I do not trade fundamentals. I'm more of what a technical trader. I'm mainly focused on trading technicals. Mostly it affects US dollar related pairs. Why? Because remember, NFP stands for what? Non-farm payrolls in the US. So it measures the non-farm payrolls in the US. So it mainly affects what USD related pairs. Even though you can see what some action throughout these other pairs that are not USD related, but the main impact is on what is on USD related pairs. That is why people who trade NFP trade gold, USD JPY, and other pairs along those borderlines. But it mainly affects USD related pairs. Why? Because it's a fundamental news that affects what the US, the country in the US. It measures the non-farm payroll in the US. No problem, guys. I'm here to take your question. If you have a question, you can just type it and I'll be happy to answer it. But remember, guys, when you're trading fundamentals, fundamentals do not create direction. They only create what? Volatility. So the difference between direction and volatility, let me try and show you. Or I'll just explain it. So a direction like this is what is a direction because you can see that it is dropping. This is what direction. You can see that price is dropping to the downside. So news does not create what direction. It creates what? Volatility. Now, what is volatility? It's just a small, impulsive, quick movement that happens on the charts. So NFP does not last for hours. It only lasts for a couple of minutes. So NFP might look something like this. So let me find a perfect example like this one. So NFP might look something like this candle over here. As you can see, this candle over here. So this might be NFP. Why? It is volatility, as you can see. As soon as it happens, it just spikes and then goes back into the original direction. So that is what fundamental traders are trying to capture that impulsive erratic movement, not the overall direction. So that's the main difference you should be knowing when you're a trader. News does not create the direction, it only creates volatility. With Euro AUD, how do you know it will go down? Is it possible it can form a double top or make a third chart to the upside of the trend line? So how do I know it is going to go down? So those scenarios that you did mention that it might form what a double top or make what a third touch, they are both possible. So how do I know is that it is backtested data? So how do I know it is backtested data that has what a higher probability of playing out in my direction? So a simple thing that I can show you. So what I'm trading, so if price creates this, you can backtest this on your own. If price forms an impulsive movement and then a correction with a minimum of what two swing highs and two swing lows, then it has what a higher probability of impulsing all the way to the downside. Now there is a possibility that price can do what can form a double top within. So let us say this is my trend line. So it is possible that price can form a double top within. But overall, once price breaks out of here, it has what a higher probability of dropping down. Even if it does form what, let us say a third touch, like so. It doesn't matter. But as soon as it breaks out, it has what a higher probability of dropping. So just like over here, as you can see, price broke out, what happened? It dropped. Price broke out, what happened? It dropped. Price broke out, what happened? It dropped. Price, what happened here? It broke out, even though it was a small movement, but it did drop. So also if you're coming over here, price formed what a breakout. So after this breakout, what happened? We had what this big descending movement. So it is all about what probability, knowing your patterns. So that is what the way I'm trading it is based upon probability. But the probability it is very high because of the backtested data. So if you can go up until the beginning of the charts from 19 what early 2000s, the structure is overall still the same. Backtested data does not lie, guys. So what I'm trading is not my own thing. It has been there before even I was born. In fact, the market have been the same. So that is why I don't like to change my trading strategy because it's been there since even since I was born. As you can see, so this is a chart from 2005 over here. 2005 February. What do we have? We have this is our impulsive movement. What do we have? This is our correction. Two swing highs and not two swing lows. Let us use what our trend line. After the breakout over here, what happened? Price dropped. Also over here, two swing highs, two swing lows. After the breakout, what happened? Price dropped. As you can see, guys, this is literally Tuesday, the 24th of May, 2005. So the data has been the same since 2005. So even now, it is still working. It is based on probability of supply and demand. So technicals what determine direction? No, they show you the direction. So there's many factors that go into determining a direction in the financial markets. There's many factors. You cannot pinpoint one thing. There's political events. There's many things, guys. But technicals do show you the overall direction. That is most likely to happen. Remember, guys, in trading, we are dealing with what? We are dealing with probabilities and not what? Not certainties. So technicals show you what has a higher probability of happening over another. So how do you explain that impulsive move to the upside that we've just shown on Euro AUD? It does not respect the 90% rule. How do you explain the impulsive movement that we just showed on Euro AUD show? Did not respect the 90% rule. So which impulsive movement up? Because the only impulsive movement is to the downside. This is trending to the downside. So I'm not sure. Are you talking about this 90% rule? On this, let me do this. Are you talking about this 90% rule? If you are talking about this, guys, remember, we have different types of patterns. You have what? ascending patterns, which are like this. So is the word ascending. And we have flags. So if we have a flag like that is like this, so let me draw it more accurate. So when it comes to flags like this, then where's the 90% rule? Because the breakout is literally going to be there. Where is it going to be the breakout? Because you have to write the impulsive leak. But if you're talking about a pattern along these lines, then the 90% rule does make sense. But when it comes to symmetrical flags, it is very different. Why? Because you still need to be able to ride that impulsive wave to the downside. The one you showed when you, okay, oh, okay, about that one, okay. So the reason for that, okay, let me show you why. Guys, remember, it won't work perfect every time, guys. Let me show you the reason for that because I can explain that one. I'll show you. But more often than not, guys, things on the market, other things we cannot be able to explain why they happen. So on this one, all right, I think we're talking about this one, if I'm not mistaken. Why price did not respect the 90% rule. Overall, it did. As you can see, what happened, price formed what a pattern within a pattern, as you can see. Price formed what this small, price formed what this small continuation. And then price went up to form what an evolved pattern. So now things changed and we're focused on what on this as a buy. And then things changed again. This pattern evolved into what? Into being this new pattern. So you need to know how to evolve your patterns, as you can see. And then this was the one that eventually worked out. So you need to know how to evolve your patterns, as you can see. So we started from this one. We started from this one looking for sales and also the small one confirmed. And then price went and turned into confirming to giving us what this evolved bullish pattern. And then price came and gave us what this overall bigger descending pattern and what finally is smaller pattern to the downside. The main thing is to know your patterns, guys. Once you know your patterns, then you know, okay, when is it time to evolve your pattern and overall? But you'll not be changing your overall direction. Why? Because you'll be starting from the higher time frame and only going with one direction. So if price, let us say, for example, we're bullish on the higher time frame. So if we were bearish, for example, so if price was forming this bullish one, we would not be executing our buys on this one. We wait for price to give us what another bearish pattern eventually ended up happening as price gave us this bigger one and also this smaller one. I hope I did answer your question. Could you explain how one goes from the higher time frame and lower time frame in analyzing? So guys, there's a lesson. So if you can log on, you can use your login details, you'll find everything. But just to give you a small broader clue, because guys, this video is going to be uploaded into YouTube. So it's not fair for me to do it, to explain the whole strategy for free to other people. But just to give you an overall sense, you pick one direction from the higher time frame and you work all of remember guys, you have many time frames, as you can see, you have many time frames. You pick one direction, let us say from the monthly, weekly, daily, 4 hour, 1 hour. You pick a pair that shows you patterns that are moving in the same direction. That is when you're doing what your higher time frame analysis. Let us say on the weekly time frame, you're having a bearish pattern, daily you're having a bearish pattern, 4 hour you're having a bearish pattern, and finally on your intra time frame, you're having what a bearish pattern. That is when you're doing what your multi-time frame analysis. You are now doing what you're trading with the trend. You're only focused on one overall trend that has what a higher probability of playing out. So that's the theory behind it, but I cannot share everything in detail. But if you're having some questions, you can definitely text me on Discord. I'd be more than happy to explain everything in detail. The reason why I cannot go too much into detail is because I'll be uploading this video for free on YouTube. And it's not for you guys who paid to be in this session and for others who didn't pay to get this information for free. But if you want to have more information on that, please do text me on Discord. I'd be happy to explain everything in detail. No problem, no problem. But yeah, guys, this is going to be the end of our session. Hopefully, it was very, very, very informative. So this is going to be the end, guys. And our VIP members, guys, are going to continue to update you on all of these pairs as they continue to progress. But on Euro AUD, guys, I'm pretty sure today you might be getting a trade on this one. But I will notify you as soon as this one it is ready to be traded in others. But for now, this is the end, and I'll see you next time.